Street Asset Management, their CIO, Aaron Gibbs. Aaron, so the floor is yours. Ken just laid out some pretty intriguing things. I like the psychology of what he was talking about.
Right.
Because it does stop people from doing things. Oh, this is an abnormal market. This is a market's going to crash. Now, doesn't mean, to his final point, though, doesn't mean we can't be overbought and due for some sort of pullback. If you want to get in this market now, how do you do it?
Right, and there are opportunities, and also, you know, we can remain overbought for quite some period as well. It doesn't have to happen tomorrow.
Right.
So, you know, maybe you want to still be able to make some money in the next month or two, right? So one of the things I would say is really using technical analysis and looking for those trends that are still well in place. And so we've seen quite a few companies that have the fundamentals that have been guiding upward, that have been beating estimates. And so particularly within technology and some of the AI space, they're still looking very good, though they are at high valuations. Don't get me wrong, they're not cheap. There's no indication right now that that trend needs to break right away. And the Fed has been pretty clear that they're not going to start cutting rates anytime soon. I think that's really been digested in the market over the weekend, and Monday we had that 1 day of down period.
How do you explain that then? That, okay, so October, end of October, Jay Powell, he gives us the high sign, hey, we're going to cut 3 times. The market will naturally assume 6 or 7 times.
Yep,
because we don't believe Powell. And we take off. This huge rally, this amazing rally, and now you're saying we've digested, the market's digested the notion of fewer rate cuts, but the rally hasn't come in.
Right.
Wasn't a large portion of this rally based on 6, 7 rate cuts?
Absolutely, and what's gotten hit, what really has taken a massive hit has been your small, your mid cap, basically your non-large caps. And even when you look at the dispersion between the S&P 500 market cap weighted, those magnificent seven we talked versus equal weighted, that spread has gotten larger and larger.
Gargantuan, right?
It's an absolute peak. So that's where you're really seeing that those stocks are primed to take over, but not until we're much clearer about where the Fed rates, when the Fed is going to cut rates.
I'm glad you brought that point up, because you could argue, I mean, I've got a chart here, we're going to bring it up, the Russell 2000 versus the S&P 500. The Russell 2000 was overvalued versus the S&P, perhaps going back to 2013-14. It's been a straight line down. It has gone precipitously lower. We're at a 50% discount, but we were also at a 50% discount in 2020. So the question is, when do you start to buy these? Because a lot of folks have been premature, and they're now watching everything else go up.
No, and I absolutely was part of that premature. I really thought December was going to be the start of it. I'm pushing it back until the second half of the year. So I'm saying those trends of being within the safe stocks, the safe large cap U.S. stocks, I think are going to hold well until the second half of the year, when we finally see the Fed start changing their language. And so for now, I don't see any. I think your safest bet, even if like an overbought means that at least you're not going to get as big a drop as some of those smaller cap stocks, that's your safest bet for the next, let's say, 2 to 3 months.
All right, before I let you go, I know you've got a couple of ideas you're looking at.
Yeah, so for diversification, since we are in this overbought U.S., there has been a massive outflow from China. As China really is deteriorating, they are not in the optimistic checkbox there. And we are seeing a lot of flows still go into the Asian countries around them, so Taiwan, South Korea, Japan. So I think one of my
market's at a 34-year high.
Exactly, and so. Exactly, and it's really because of these cash flows, not because like something fundamentally has changed.
Right.
So taking advantage of that flight to safety within the Asian markets, Taiwan Semiconductor, it also takes advantage of the AI play. You trade that as an ADR on the U.S. Stock Exchange. You don't have to buy directly from Taiwan, so that's one of my plays. And the other is Teradata. U.S. company, enterprise software, very high margins, beating estimates, you know, all the good stuff. And I think we could even see like another 25% to the upside. I don't think it's overvalued, overbought.
All right, so folks, listening on radio, TSM and TDC.
That's right.
All right, great stuff. Thanks a lot.
Thank you, Charles.